Hi everybody, and today we'll be discussing about ICDS 10 on provisions, contingent liabilities and contingent assets. So what is this ICDS? Let us try to understand. Hey, have you heard of the name Johnny Depp? Yes or no? Yes. Have you heard of the name Amber? Yes sir, we heard. Now, now I'll not get into the data, facts and all. Just keep it simple to make you this ICDS. Okay? Yes. So Johnny Depp filed a case against Amber that she has tried to defame him unnecessarily. So who filed a case? Johnny Depp filed a case. Against whom? Amber. Right? Now the court case went on for so many years. Now during this process, Johnny Depp anyhow claimed that he should get some huge compensation from Amber. And if he wins the case, he will definitely get the compensation from Amber. And if he loses the case, he will not get any compensation from Amber. Now, is it sure that he is going to get? No, it is not sure. It is conditional, right? It depends upon winning the case. So we can also use the word contingent for it. So it is basically contingent. For Johnny Depp, it is a contingent asset because he may receive the money. And for Amber, it is a contingent liability. She may have to pay that money. So you understood what is contingent asset? That probably in future we may get certain amount, and as of now it is not confirmed. And contingent liability, we may have to pay some amount in future, but again that is also not certain. So that's why we call it as contingent liability. Now we should understand that ICDS 10 talks about provisions, contingent assets, contingent liabilities, these three things. But understanding each and everything is technically important, so we will understand. But before that, one question which always comes to your mind: why should we study this ICDS? Is it really important? The answer is yes. Because in business, most of the cases, there are so many court cases, litigations go on, where there involves lot of money which we have to pay or which we have to receive. Now, how to recognize it? For the purpose of income tax, that should be answered, and for that purpose this ICDS 10 on provisions, contingent liabilities and contingent assets has to be studied, because ultimately if it is a liability you have to show it as expenditure. If it is going to be your asset, then you will show it as your income. So when to show it as income and when to show it as expenditure under the head PGBP is what to be understood under this ICDS. When to show and when not to show, both are covered. But let us understand some key terms first. The first one is the obligating event. Now this is really tough definition for me. I'll tell you. Simply, when the court gives the decision that Amber has to pay. It happened first time a woman has to pay compensation to a man. So that's why it's a landmark case. So anyhow, coming to the story, when the court gives the decision that Amber has to make the payment of compensation for defamation to Johnny Depp, that becomes the obligating event. Now put it this story into these lines. Obligating event is an event. Obviously, it is a court judgment which creates obligation. Okay, that means Amber making payment, which results in, what is the result of it? The result is that there is no realistic alternative. Amber has no choice. She has to make the payment. So having no realistic alternative, for settling the obligation. So there is no alternative, just make the payment, right? This is what obligating event is. Now what is the present obligation? The third key term I am discussing now. Later on we'll discuss second one. For Amber, it is the present obligation. Pay to Johnny Depp. Hey, when you took the divorce, you recovered all the money from him, right? Unnecessarily you defamed him, and now you are paying defamation charges. So for Amber, present obligation is an obligation, right? If based on the evidence available, yes, it was proved in the court. Amber said that Johnny Depp applied domestic violence on her. Oh my God, is it? But there are many other people who spoke in the court that no, it did not happen. Domestic violence is not what happened with Amber. She is totally lying. And when it was proved in the court, that means based on the evidence available, its existence, that means present obligations existence they are talking about, at the end of the previous year is reasonably certain. That means Amber has to make the payment. Clear? Are you able to understand? Now, what is executory contract? Suppose Amber has not yet made the payment to Johnny Depp. So, it is an executory contract yet to be performed, right? Many a times in contracts, what happened? Parties enter into agreement, but they are yet to perform. Suppose example, for December I am launching the classes, December 2022. Now you actually want to join. So you said, okay sir, I'll join. You made the payment. Now I have to give access to the classes to you. I have to send the book to you. So from my side, it is executory contract. So parties are yet to perform the contract is called as executory contract. Many a times there are a lot of contracts which we enter with government, where government is also yet to perform, we also yet to perform. It is only just signed contract. So this type of contracts are executory contracts. So I feel you understood all the three terms: obligating event, executory contract, and present obligation. Clear? Now let us dive into the ICDS 10. What is the scope? So what are the things covered? So ICDS 10 covers all provisions, contingent liabilities and contingent assets. Provisions, contingent liabilities and contingent assets. But there are four things which I am going to talk that will not be covered by this ICDS. So I am going to talk about four things which are not going to be covered by this ICDS. What are that four things? First thing, financial instruments. Like shares are there, debentures are there, bills of exchange are there, promissory notes are there, derivatives are there, options are there, futures are there, swaps are there. अब बस करते हैं यार, ठीक है? So financial instruments are there that are not covered by this ICDS. Okay. Next thing, executory contracts, which I explained just now, that is also not covered because the parties agree to perform and they have to perform, right? There is nothing called as doubtful in executory contract. Only when things are certain, possible, they enter and that should be performed. So it is not covered by this ICDS. So financial instruments are not covered, executory contracts are not covered. Insurance business, by entering into contracts with policy holders, like you take LIC policy or Tata insurance policies or Bajaj Allianz, right? So many insurance you take. So that insurance or even general insurance like fire insurance, marine insurance, such insurance contracts are not covered by this ICDS. Okay. Last thing, if any contracts or anything is covered by other ICDS, then this ICDS will not apply because anyhow this is the last ICDS. If certain things like government related contingencies are there, they may be covered by government grants. So then this ICDS will not cover. So The scope of these ICDS 10 on provisions, contingent liabilities and contingent assets says that first thing, it covers provisions, contingent liabilities, contingent assets. But these ICDS don't cover financial instruments, executory contracts, insurance contracts and any other things covered by other ICDS. Done? So shall we dive into provisions now? Chalo start. What is provision? Yeah, really, what is provision? Now, when Amber prepares her final accounts, she has to create a provision because she has to make payment to Johnny Depp, right? That is what provision is. So basically provision, hey, in accounts we study na, in P&L account debit side we write to provision for bad debt, provision for doubtful debts, to provision for taxation. Same way this is provision for some liability which she has to pay. She will write to provision for defamation suit, right? So what is provision here? So let's understand. Provision is basically a liability which can be measured with substantial degree of estimation. So provision is a liability which can be measured by substantial degree of estimation. So what did you understand? So something, provision is a liability. Okay, Amber has to pay, that is provision, which can be measured with substantial degree of estimation. So before court exactly declared the number which he has to pay, the court gave certain hints, right? Amber has to make compensation. Now she has to start estimating, calculating how much she has to pay, right? Because suppose tomorrow after few months Diwali Dashra comes, we will plan our budget or not, that how much we may have to spend for Diwali or Dashra expenses. So we create some amount aside, we keep some amount aside for it. So we create a provision for that expenses. Tomorrow children's marriage is there or children's college fees is there. For that parents create a provision, keep some amount aside. Same way Amber also had to keep. We don't know exact amount which has to be paid for children's education or for Diwali expenses. But we reasonably, reliably measure it. Right? So that is what provision is. So provision is a liability. Obviously we have to pay out, which can be measured. Okay, we can calculate it with substantial degree of estimation. Yani reasonably correct estimated calculations we can do. But in exam you write with substantial degree of estimation. Okay. But then what is liability, right? So basically liability is, if you are bored with Amber's example, I can give so many other examples, don't worry. But first liability, let us understand. What is liability? Liability is a present obligation. So presently we have to pay, right? Arising out of past events. Whenever you eat lot of ice cream, this happens. Huh? So throat issues. Chalo anyhow, let's understand provision. Oh no, liability. Liability is a present obligation. What I said? Liability is a present obligation arising out of past events. Arising out of past events. Arising out of past events, which is expected to result in an outflow to the person. Oh, outflow for Amber, right? Resources embodying economic benefit. Dollar, right? She has to make the payment of dollars to Johnny Depp. So that's what liability is. So liability is a present obligation arising out of past events, which is expected to result in an outflow to the person of resources embodying economic benefit. So she may have to pay in money, she may have to transfer certain buildings, assets, whatever it may be, but it has economic benefit which she has to pay to Johnny Depp. Clear? Yes, sir. Now, we understood what is provision. Provision is a liability which can be measured with substantial degree of estimation. So what is liability also we covered now, right? Chalo, great. Now how it should be recognized? Same thing whatever we wrote in these two lines, right? We defined provision, we defined liability. Both these things are covered in 3 points, A, B, C. First thing, present obligation out of past events, which is resulting in outflow of resources embodying economic benefit, and which can be estimated with reasonable certainty. If these three conditions are satisfied, if these three conditions are satisfied, if these three conditions are satisfied, what are they? Present obligation based on past events. Second one, which can be resulting in resources, outflow of resources embodying economic benefit, and which can be estimated reasonably. So if these three conditions are satisfied, then the provision should be recognized. Okay. Next thing, I'll tell you that if suppose you are going to incur certain future expenditures, like future operating expenditure. Suppose next month I have to pay salary. Next month I have to incur certain expenditures. So I cannot create a provision in accounts for that. Why? Because provision is something which arises out of the past events, right? And whatever you do in future, that will not influence the liability. Like Amber, whatever she may do in future, it is her headache, but she has to pay that liability, correct? So what did you understand out of this? That basically payment has to be done. So any future expenses, for that we cannot say it is a provision. Only that liability which arise out of the past events. Future outflow of economic benefits are there, but it is not dependent on your future actions. What you do in future will not influence this. कर्म का फल भोगना ही पड़ेगा. Correct? That's what I wanted to convey you. This is what we understood about recognition of provision. Now come to the next thing. Measurement. Suppose if you show a reasonable estimate of the present obligation, that is what your provision is. That's it. So reasonable estimate of the present obligation we should do, and that's what they say in the measurement. Every year, time to time, you continuously update, measure, check, and whatever is payable, that you try to show it properly. That's what we talk in measurement. But please, you may have to pay in future. Don't do discounting. We know financial management will do discounting. No, don't discount it. Show as it is. Okay, this is what measurement is. Clear to all of you? Yes. Now sometimes we have to reimburse also. Suppose you debited the provision. I am just using accounting language to make you understand. In income tax we deduct it, and suppose we deducted the provision as per income tax, and later on we recovered it. What to do? Simply we have to treat it as income. So please understand, in PGBP calculation we deducted it as expenditure, the provision. Now when we recovered it, it should be treated as income, added. That's it. Clear? Yes sir. Now I will tell you, can the reimbursement be more than the provision? The answer is no. Reimbursement cannot be more than provision. Right? Your provision is 50,000 and reimbursement for that is 70,000. Not possible, right? Not considered. Okay. Next thing. If suppose some third party has to make the payment to you, and that only you have to make the payment to other. If third party don't pay, you also will not get, and you will also not pay. Now for this, do you require to create a provision? Not required to create a provision. अरे नहीं आया तो नहीं देंगे. If I don't get, I will not pay. So for what we have to create a provision? There is no reasonable certainty of any outflow from our pocket, right? If there is in, then only out. So that's why no need to create a provision for this. Sometimes we have to do reversals also. Every year we actually measure the provision. Every year what we do? We measure the provision. And we understood that there is no requirement of provision. Unnecessarily we are showing. There is nothing to be paid out. So just if there is any provision created, reverse it. Okay? Yes. And if we have created a provision, we will use the provision for the same purpose. If we have created the provision, we have to use the provision for the same purpose. If we have created the provision, we have to use the provision for the same purpose. Now I will tell you certain things which are not there in the ICDS but useful for you. Now as per income tax, when we talk about PGBP chapter, other sources, there is nothing called as provisions to be allowed as deduction, right? But PGBP, yes. Under section 36, provision for gratuity, provision for superannuation, these are allowed as deduction. Provision for gratuity, provision for superannuation are allowed as deduction. Now, suppose in accounting, you also write a provision for medical expenses of employees. In accounting, we can deduct it, we can debit it, we can reduce it from the income, provision for medical expenses. But in income tax, no, not at all allowed. Now, what is the catch here? The catch is, even though the ICDS talks about provision, ICDS talks about the measurement of provision, only ICDS can talk about the measurement, recognition, reversal, all that. But it will be done only when the Income Tax Act 1961 permits. That means the treatment of provision, whether deducting it or whether it is adding back, are only dependent upon the sections of income tax. ICDS will not be having any authority, or we cannot say that as per the ICDS, the provision should be reasonably measured, so it should be deducted, and that's why we are deducting provision for medical expenses of employees. Not allowed, re baba, not allowed. Because provisions will be allowed as deduction only if mentioned in the sections of income tax. ICDS can lay down the principles, can be guiding force, but should be deducted or not, income tax sections will tell. Like example, if you have created a provision for gratuity, and that too gratuity is approved gratuity fund, then it is allowed as per section 36. It is not approved gratuity fund, disallowed as per section 40. So this you should be understanding. Okay, clear? Shall I go forward? What is contingent liability? Now, before I go to contingent liability, I will just show you one small thing in provision which I missed. Just come back to the contingent liability only I have to discuss. I covered every aspect. I thought I forgot. I missed something, but no, we covered everything. Now come to contingent liability. What is contingent liability? Contingent liability is a possible obligation. What I said is a possible obligation arising out of again past events. Oh, is it same like provision? Yes. Contingent liability is a possible obligation. There we used present obligation. correct? In provision, it is present obligation. In contingent liability, it is possible. So if something is possible, it can be impossible also, right? So contingent liability is a possible obligation arising out of past events. Arising out of past events. Now, which will be confirmed by. Now, whether the liability is there, should be paid or not, will be confirmed by the occurrence or non-occurrence of an uncertain future event. Occurrence or non-occurrence of future uncertain event, which is not wholly in the control of both the parties. Now, I said this, but let me explain with one more story. Suppose COVID happened, the whole world actually suffered because of it. The Chinese people really created a hell for the whole world. In the Wuhan labs, this virus was created, and with almost certainty the whole world knows, but nobody dares actually to challenge China, ask China the tough questions. But anyhow, America filed a case against China that we want $5 trillion, $5 trillion, right, as compensation for the loss because of COVID. America filed a case against China in the International Court of Justice. Now tell me, when America filed a case in the court of law against China, presently we can say, from Chinese perspective, I am telling you, okay, see, it is a possible obligation. China may have to pay. So it is a possible obligation arising out of past events. Arising out of past events means whatever they spread the COVID virus and all that. Arising out of past events, which will be confirmed by that whether China has to pay, will be confirmed by the occurrence or non-occurrence. That means the International Court of Justice giving the judgment that yes, China has to pay to America. So it may happen, may not happen. That's why occurrence or non-occurrence of a future, because as of now the court did not give any judgment. It is just pending litigation. Okay, occurrence or non-occurrence of future uncertain event, which is not wholly in the control of either of the parties. So neither China nor America know that what will the judge decide, correct? That's what current contingent liability is. Now one more part they said, which is really interesting. They also said that it is a present obligation. My God, present obligation? Same like provision? Yes. So here they used it is a present obligation. But they said resources embodying economic benefit. Whether it will go out, whether there will be any outflow of resources embodying economic benefit, we don't know. Can you ascertain it? We don't know. So that's what they said. So present obligation is there and it is also contingent liability. But whether outflow of resources embodying economic benefit will happen, don't know. And whether it can be reasonably measured, as of now, no. If it is the case, then it is a contingent liability. यार उसको provision में ही रखते, right? You would have kept it in provision. What is the problem you have, right? So anyhow, as of now, it is contingent liability. So we have to remember like this. Suppose example, Chunnu, Munnu, Tunnu, three people together took 30 lakhs loan from Jagan, right? Tunnu, Munnu, Chunnu took 30 lakhs loan from Jagan. Now proportionately each person is equally liable. 10 lakhs, 10 lakhs, 10 lakhs each. Now for Chunnu, if suppose Tunnu and Munnu don't pay, Chunnu has to pay that 20 lakhs, correct? Right? For Chunnu, whatever he has to pay, his 10 lakhs, is a liability for him. Okay? But whatever the other two has to pay, because they took it jointly, and when they take it jointly any loan, they are jointly and severally liable. So if suppose Tunnu and Munnu don't pay, Chunnu has to pay 10 lakhs, 10 lakhs, that means 20 lakhs extra. So that 20 lakhs is contingent liability for Chunnu. So whenever there is a joint obligation taken, the obligation to be performed by the other parties proportionately becomes your contingent liability. Now, should we recognize the contingent liability? The answer is no, not at all. We should not recognize the contingent liability. Great, understood, yes or no? Yes. Not to be recognized. In accounting, what we do? We put it as footnotes to the balance sheet. In income tax, we will not recognize, we will not deduct it. Come to contingent asset. Now from American perspective. America has a possible asset. They may get $5 trillion. Baapre, $5 trillion. So, possible asset for America arising out of past events, because COVID was spread by China. Right? North Korea is a very good friend of China. No COVID was spread there. So, whatever countries were good with China, COVID was not spread there. But other countries, they spread it. And during experimentation, they spread entire COVID in their country, still they are suffering. बोलते ना किसी और के लिए गड्ढा खोदोगे तो तुम ही दफन हो जाओगे भाई. Right? That's what happened with Chinese. So anyhow, coming to the concept. Contingent asset is a possible asset which America has to receive, resulting out of past events that China spreading COVID. Okay? Okay. Which will be confirmed by occurrence or non-occurrence. That means the court giving judgment or not giving judgment in American favor. Occurrence or non-occurrence of a future uncertain event, which is not wholly in the control of both the parties. Now it is not in the control of both the parties, right? America will present their case, China will present their case, right? And what happens? The court will listen and then give judgment. And I will tell you, if China says we are not even going to talk in the international court, still what America can do about China, God knows. What International Court of Justice can do with China, God knows. The international bodies are not having that spine to build an environment of peace, harmony and unanimity at the international level. That's what the problem which the whole universe or globe or the world is facing. Anyhow, let's go forward. Yeah, India has that spine really and the strength really to bring the world harmony, and in future we are going to become the Vishwa Guru. That confidence, that vigor we should have in ourselves. That values already we have. Now, contingent asset we understood, right? Contingent asset is a present asset based on past event, right? Which will be confirmed by occurrence, non-occurrence of future uncertain event, which is not wholly in the control of both the parties. But the answer is, we should not recognize contingent asset. So we should not recognize contingent assets. Clear? But time to time we should estimate. If there is certainty that we are going to get the money, then definitely it should be recognized as income. Okay? Right. Come to the last thing, disclosures. What they say in the disclosures? They only talk about disclosures from provisions perspective. Why? Because obviously the contingent liability, contingent asset need not be recognized. Then what to talk about disclosures in that? So they said that we'll talk only about provision. So what are the things to be disclosed? Whatever I discussed till now regarding provision, same should be disclosed. That means what is the obligation, right? Like Amber has to pay for defamation to Donny Duff. This is obligation. Second, China has to, okay, it is as of now contingent liability. Suppose if court gives the judgment in America's favor, then China has to create a provision, and for China it will become a liability. In that case, the obligation is to pay the money as a compensation for spreading virus. Correct? Next thing, carrying amount. Time to time, every year we actually update the provision. So what is the opening provision? What is the closing provision? That also we have to show. Sometimes there may be some additions to the provision, right? When we estimate the liability, the outflow may be more. That is what we estimated. So when we estimated it, we have to do additions. That also should be disclosed. Sometimes what happens, after estimation we know that we need not pay this much amount. So whatever out of that provision, we have to reverse that provision. Sometimes we may pay that amount. So whatever we utilized the provision for making the payment, that also should be disclosed. If suppose we have reimbursed it, that also should be disclosed. Reversal is done, that also should be disclosed. So with this we cover the entire ICDS on provisions, contingent liabilities and contingent assets. In the description, notes are given, so they are arranged in a very nice way. So utilize these notes, it will be really useful for you, helpful for you. Thank you all for the patient listening.